I personally save in gold, but I maintain a lot of US dollar liquidity.
Mm,
I think those are very different topics. I know that my US dollar liquidity is costing me purchasing power.
yeah.
I get paid, what, 4.5% in, a little less actually, 4.3% in very short term treasuries in a currency where my purchasing power is declining by 7.5 or 8% a year. So my liquidity is costing me 3.5 or 4% a year. I get that.
Mm,
I am willing, although not happy, to accept that negative yield because I consider the negative yield to be an option premium. If I have liquidity and
mm,
we have a liquidity induced market squeeze, I will take advantage of the circumstance rather than being taken advantage of. I remember well the year 2009 after the 2008 collapse. I went into that psychologically prepared and financially prepared. The consequence of that is that 2009 was the single best investment year of my career. And I believe personally that the negative return that I receive on my liquidity is, as I say, an option premium, giving me the ability to take advantage of economic turmoil rather than being taken advantage of.
mm,
I think there is utility in Bitcoin, although I don't understand that utility well enough to own it. There is a network effect. There is a transactional efficiency. It isn't always present in the market, but there is a theoretical transactional efficiency in Bitcoin. And there is, as I say, that network effect. There is also, right now, some element of anonymity and privacy, although the Bitcoin adherents would ironically like to remove the benefit of transparency in hoping to get government backing for Bitcoin. They're sort of like penny stock promoters in that regard. The idea that gold has value in and of itself, it's had the same network as Bitcoin has, except for that it's had it for 5 millennia. It's durable, it's divisible, it's malleable, it's indestructible. The truth is that there are no certain answers in life, other than, of course, death and taxes. What you do is you look at the circumstance that you find yourself in and you speculate in probabilities. I don't know enough about Bitcoin. I don't have any durable competitive in terms of my knowledge about Bitcoin relative to other participants. So I'm not in that market. We certainly measure the price of gold in the floating abstraction that we live our lives in. In other words, we base our sense of the price of gold on a floating abstraction. You have to deal with that in your life. I, uh, coming in to the 2000s, I sort of sat down and I had a talk with myself. I said, this is what you've done. This is what's worked. This is what hasn't worked. What are you going to do with your life, with the rest of it? A pretty thoroughgoing conversation. And one of the things that I decided, gold was very cheap then, 250 something dollars an ounce. And I'd gone through the ups and downs of the gold price. I reread Aristotle and I paid some attention to gold markets in my lifetime. And I decided that one thing that I would do is keep an alternative set of books for myself and my family. The official set of books, the ones that I pay taxes on, are denominated in US dollars, of course. But I began to systematically save in gold. And I began every year to recharacterize my assets, my liabilities, my savings, and my expenditures in gold. And that's been an extraordinarily useful uh, exercise for me. When people say to me on podcasts like this, or they don't say it now, but 2 years ago, they say, well, or 3 years ago, when's the gold price going to move? And I could look at them with a very straight face and say, well, the gold price is going to move in 2000. It has increased in price by 8.5% compounded for the last 20 years. If you denominate your life in gold, what you see is that real pricing, in your terms, is decreasing.
mm,
Rents are decreasing. Health insurance is decreasing. Groceries are decreasing. Gasoline is decreasing. It's very interesting. It makes you particularly questioning of maintaining your liquidity in US dollars. It
yeah.
calls into very, very, very stark contrast the difference between the true yield that you receive and the deterioration in the purchasing power that you experience in fiat currencies. It's a wonderful consciousness raising exercise. It's stupid because my life is tied to gold in so many ways. I'm still the largest shareholder of Sprott, which I would suggest is one of two worldwide brand names for precious metals investment. To the extent that the gold price does well, my Sprott stock will do spectacularly well, which it has. I also have a disgustingly large percentage of my portfolio in gold mining stocks. But that's my trade. That isn't just an investment. It amuses me. And speculation in natural resources is how I ended up with an economic surplus to save in anyway. If a rational financial planner looked at my portfolio, even assuming that financial planner was not unsympathetic to gold, he'd say, Rick, you're out of your mind. Your income will go crazy in the kind of gold market that you're forecasting. You don't need to own gold to protect yourself. But the truth is that I believe that the essence of money, the essence of wealth, is enhancing your sense of well-being. And I can tell you from the bottom of my heart that gold helps me sleep nights and stay calm. And that's a wonderful attribute at age 72. Sleep doesn't come naturally. In my experience, precious metals bull markets are led by fear buyers. They're led by gold. When the momentum in the gold price first moves the best gold equities, which we've seen in the last 18 months, and then moves down to the mid-tier gold equities, the generalist investor becomes enticed with the precious metals narrative. When the generalist investor comes into our space, market leadership, and I'm not sure why, I suspect it's the lower unit price, market leadership switches from gold to silver. I've watched it happen 3 times before in my career. By the way, when that happens, you won't need Rick Rule to tell you that it's happening. It will be very, very, very obvious. As I say, I don't know why leadership switches to silver, but it does. I think we're in a precious metals bull market that is likely one for the record books. More dramatic than the 2000 to 2010 market, more dramatic than the 1998 to 2006 market, for the reasons that we talked about at the beginning of the show. And I'm reasonably certain, although I don't know why, that history will repeat, in the sense that at some point in time, the generalist investor, who, by the way, does not yet know how to spell gold, will come down into our space. And when they do, I would suspect that the price appreciation that you will see in silver will be as dramatic as it has in the past. And when I was a younger man, ironically, I had more time on Earth and I was less patient. I concerned myself a lot with the why question. Or not the why question, I'm sorry, the when question. I, like everybody else I observed, had a track record unblemished by success in terms of anticipating the when. And I remember reading a Warren Buffett quote in one of his wonderful annual reports, where he said that forecasting markets is a complete waste of time, that you can allocate 15 or 30 minutes, a week to it for your amusement, like you do the crossword puzzles. But devoting more time than that to it was, quote, trying to know the unknowable. So I don't do it. I concentrate on asking myself questions where the answer begins with when, not if. And I understand that if I speculate in probabilities where the upside is truly spectacular, the when becomes less important. Let's say that I believe that gold will take out its former, or silver will take out its former all-time highs in real, not nominal dollars. Okay, that it will take out its all-time highs in $1980. In fact, let's say that I think it'll only go to half its all-time high in nominal dollars. That means that the silver price from here triples or quadruples. Now, while I would like to know when that's going to occur, I can't. If I got a quadruple or a triple in a year, would that be good? How about 2 years? Would 3 years be a sufficient amount of time to wait for a triple or a quadruple? The truth is that people who can't familiarize themselves with those probabilities are people who would be best off still believing in the tooth fairy. I've talked to Michael Saylor. I'm personally not infected by fear of missing out.
Yeah.
I'm delighted when other people make money, and I have no temptation to follow them into circumstances I don't understand. I know a lot about conventional financial services. That's why I'm starting a bank. I know a lot about natural resources. I don't know very much about technology. I don't know much about communications. I don't know much about unconventional financial services. So I don't go there. I'm delighted that people have made money with this. I'm delighted that, Saylor has enjoyed such success and made so much money, provided that people take the time to sell at some point in time with MicroStrategies. And I have absolutely no temptation or inclination to buy. My experience has been, Phil, that when people are attracted in as manic a fashion as they are to leveraging what seems to me to be a technological abstraction, that I am not getting into a market that's underbought. And so if I were interested in Bitcoin, the fact that it's gone since the time that I became aware of it for $10 a coin to $100,000 a coin is not the sort of thing that attracts me. But ironically, the broader public seems not to be attracted to a narrative until the underlying price action of the subject of the narrative has gone so far that it's obviated the narrative itself. If I'm right about the gold price, and if in 10 years the gold price goes in a nominal sense up fourfold, mirroring the deterioration of the purchasing power of the US dollar, I would suspect that after that move, gold will be astonishingly more popular than before the move. In other words, with regards to financial goods, the length and breadth of the world's population would prefer to overpay rather than underpay. And I try, not always successfully, to be on the other side of that trade.